Hello and welcome to this Forex Preview at xm.com. We'll be discussing the upcoming non-farm payrolls data and the potential reaction in the markets. I'm Maria Pashurdias, and joining me is investment analyst Cristina Parthenido. So Cristina, yesterday the Fed hiked rates by a 0.25 percentage point, as widely expected, but it did not commit to a pause as some investors anticipated. Do you think Friday's non-farm payrolls could give us a bit more insight into the state of the U.S. economy and what investors can expect going forward?
Hi, Maria. It's nice to see you here. I believe that Friday's non-farm payrolls report will definitely attract attention because, as you have nicely mentioned, the Fed didn't provide any clarity about whether it's time to pause monetary tightening. It didn't say whether this month's rate hike was the last one in the tightening cycle, but it did say that we are getting closer to that point, acknowledging the risks in the banking sector and the cooling in the economy. So the central bank appeared a bit more cautious than previous meetings, and that was also reflected in its guidance, which was changed to something less hawkish, stating that additional tightening will be subject to stronger than expected growth, hiring, and inflation. So that made the next non-farm payrolls report important to watch this week. And according to forecast, investors don't expect great numbers. Non-farm payrolls are expected to grow by 180,000 compared to 236,000 registered in March. That will be the lowest reading in more than a year. Also, investors forecast a slightly higher unemployment rate of 3.6% and a steady wage growth of 4.2% year on year. Of course, if forecasts are correct, that will still be a picture of a tight labor market, but it will clearly be a downshift from the previous impressive numbers, which could subsequently make investors think that pausing rates during June's policy meeting might be the right thing to do. And if the outcome appears worse than expected, that might even raise the odds for a rate cut, especially if we get some additional negative news from the banking sector. While currently futures markets are pricing in a 25 basis point rate hike for June with a very small probability, despite Powell playing down the scenario of rate cuts. So overall, it seems that Powell hasn't really convinced investors on that front. And I'm waiting to see how the non-farm payrolls report will affect rate projections this Friday.
Turning to FX markets now, the US dollar did not like the FOMC announcement and moved lower. Could we see more weakness later in the week?
Indeed, the FOMC policy announcement did support the US dollar. Yesterday, the currency faced a relatively stronger decline against the yen and gold, probably because demand for safe havens also increased. On the other hand, its losses against the euro were limited. I think that the US dollar could still find support in the near term. Technically, there are some key levels at which the currency could still pivot. Specifically, dollar yen could still rebound near the 134 level, and euro dollar is still trading below the 1.11 number. Though fundamentally, for the dollar to stay resilient above these levels, the NFP report will need to surprise significantly to the upside, will need to deviate above forecasts in a clear, with a large margin. And I can say that forecasts are relatively low at the moment, so an upside surprise cannot be ruled out.
Cristina, thanks so much. And thanks for joining us for this Forex Preview at xm.com.